Hey, before we get into the show, I just want to remind you guys that I do a newsletter every Monday. It's a sales tip straight to your inbox. It's called Sales Ammo. You can sign up for free to receive these emails by going to artofsba.com, and we'll put you on the email list. And then you can start getting these golden sales nuggets every single Monday to start your week. All right, now let's get on with the intro. 3,811. That's the number of SBA 7A authorizations TD Bank pulled last fiscal year. That's over 10 a day. That makes them the number 2 most active 7A lender in the country and number 1 on the East Coast in terms of units, with an average loan of under $150,000. Our guest today heads up their SBA program. Tom Pretty joins us, and we unpack how they close thousands and thousands of units. And we talk management, the good, the bad, the ugly. We talk how they've increased their ability to score loans using the SBA's SBSS model. And my personal favorite, Tom's early days as a top producing BDO at GE. So stick around. You don't want to miss this insightful interview with Tom Pretty, head of SBA at TD Bank. The SBA industry is rooted in banking, and banking is old school, but that's all starting to change. You hear people talk about AI, and it all sounds great, but let's be real. You and I don't know the first thing about AI, but Lumos does. Lumos is an analytics company that provides small business lenders with better tools that drive better decisions in a more efficient process. Take the Lumos Business Report, for example. This is going to completely revolutionize how deals get underwritten, starting with the BDO. The Lumos Business Report allows lenders to search for a specific business and in seconds access all kinds of information like a business overview, industry data, insights into competition, average pricing, even a predicted expected loss, all tailored around that specific loan request. Guys, we can finally make credit decisions using actual data. Stop using what you think you know about an industry to make credit decisions and start using the whole story. Let Lumos take your small business lending to the next level with cutting-edge analytics and AI by going to lumosdata.com and scheduling your demo today. Tom, thanks for joining us on the podcast.
Oh, thanks for having me here. Very cool.
And I did mention it earlier, but I love the beard. Is that symbolizing anything, like a new what? Is this like a new thing for you?
I guess it is new. Probably like a lot of beards. It was a pandemic beard that
Okay.
stuck.
Good.
So
good. Well, I want to get a little bit about your background first before we get too deep into it. So why don't we start with the famous question we've been asking on the podcast for many years? How did you get into SBA?
yeah. So I started my career with GE and went through some management development programs there. I was a information management leadership program, and then graduated that, went into their corporate audit staff, which is another executive kind of development program. And it was funny going through those programs. I saw a lot of jobs I didn't want to do, but one of the things that always appealed to me was sales. And then I was good at, the balance sheet and income side of things. So, the financial sales kind of, made a lot of sense. And so I came off of that, and I was able to get a role working for, GE had a SBA division inside of it, and kind of, grew up through there.
Wow. Interesting. Yeah, GE had an incredible management program. I've always heard a lot about it. You don't really see those nowadays.
Yeah, I mean, I work at a pretty big institution now, TD. We have some of that. We still have credit training, which is a
really?
big plus.
It's rare now, but
Yes.
that's great. You
Yeah.
should have credit training.
Yeah. No, I was really fortunate,
Cool.
to be able to go through those management programs back in the day. A lot of really cool experiences and things to learn what to do and a lot of what not to do, right?
Right. Yeah. And when you were at GE, were you a BDO for a couple of years?
Yeah. So, I started out, I kind of came off these programs, and I had some opportunities, in GE divisions to be like the CIO or CFO of some smaller divisions, or, some pretty high level positions. And I kind of took a step back in my career because it's hard to get into sales, right? And so I was like 29 years old, and I took a what we called a ASR role, associate sales rep role, or today it'd probably be called like a BDA.
BDA, right?
Yeah. Did that role, and then a position became open in Portland, Oregon. I'd never been to Portland, Oregon in my life, and my boss said, call me. I was getting back from a vacation. He said, hey, I'm picking you up tomorrow at 7 a.m. We'll talk about it in the car. And I got in the car. He's like, I want you to move to Portland, Oregon. And we drove down. I was living in Seattle at the time. We drove down to Portland, Oregon. And, so middle of the, I think that was like May or June, and I did $11 million in volume my first year. My next year I did over 20 million, was one of the top 10 BDOs in the country, and a pretty big sales force at the time. We were like, over 100. So I did that. And then a position became available in Chicago to become a sales manager, and moved out there and grew that region. And then, so that's kind of how that all happened.
When you're a top 10, BDO, and you're in such a large company, like what were the characteristics or traits or how you went about the business that kind of propelled you up into the top 10?
To be a good BDO, there's the basic blocking and tackling, right? You got to make calls. You got to work hard. You got to understand financials. You got to understand credit. You have to be likable. You got to show up on time. The
basics.
The basics. But I think one of the things that I did, and I think one of the things I see with really good BDOs, is you have to be able to build credibility. And what I mean by that is, if you're working with a small business owner, we call it small business, but if somebody's buying a building or buying a business, this is the biggest transaction that they've ever done.
100%.
Right? And so they need to know and have trust and feel like, and faith and credible that you're going to get their deal over the finish line.
Right.
And so being a BDO at that time and with GE, we were never the cheapest. Right. But I think we had a good product, and on top of it, and I see this in all good BDOs, they're able to build credibility with the borrower. And that also goes back to, I also say that credibility is really important with COIs, right? Whether you're working with a business broker, a real estate broker, a CPA, like if they're giving you their customer, they're giving you their most important asset, right? And so you have to be credible. And so I think that's something I was able to do, and was key to my success, and what I see in a lot of great BDOs today.
Well, we talk about credibility on this podcast quite often, and the other one is internally. Yep. Credibility with your internal team.
Yep.
Underwriters, closers, all of that, because some BDOs, sometimes they get a bad rap.
Yep.
But that's for a reason, right?
Yep.
We come in all shapes and sizes. So that's the beautiful thing about it. Like, you can get enough flexibility to where you can kind of treat it like your own little business, at least for, I speak for myself kind of as an external go-to-market BDO, kind of like I could build my business how I want to build it, but it's also up to me to kind of keep the bar high. But you're right. Some of that basic stuff is just, you can probably get past, you get pretty far just doing the basics, call people back.
Yeah. Yep, absolutely. You got to email, respond. You got to text, respond. You got to call, respond. There is a lot of that. But yeah, it's building that credibility, and then, you talked about internal, like this whole business. One of the best parts about it is it is a people business, and it's a relationship business. And you got to have good relationships with your customers. You got to have good relationships with your COIs. You got to have good relationships with your credit team, your closing team, your risk officer, and always be working on those.
Yeah. You like sales, you were good at sales, but you ended up going, into management, right?
Mm-hmm.
Why did you leave sales? You just wanted to kind of climb the ranks and go up into management, or what?
Yeah, I think, sometimes I joke, like, that BDO role was my favorite job I've ever had, and I tell people that. But some of it was, I was in, as I said, I'd never been to Portland, Oregon, and my wife is from Connecticut, I was from Colorado, and we were just, far away from home a little bit. Mm-hmm. And so a little bit of that was into that. And then I got into management, and I liked it, and I was good at it.
Why'd you like it?
To be a good leader and a good manager, you really got to, want to see people succeed. Right. And it's funny, now I'm a parent, I'm a parent of 3 children, and I look at parenting and leadership are a lot of, it's really like you're almost there to serve your team, and for, their success is our success, right? Like, and you gotta want to see your team succeed, right? And if that is something you like to do, you'll probably be a good leader.
So did it come natural to you, or did you have to like learn leadership?
I mean, I was lucky. Like, it's funny. Like, I grew up. I was a Boy Scout. I'm an Eagle Scout. So I got some leadership training and opportunities at a young age in that. And then I went through. I mentioned that. Well, in the college, I had some leadership roles. Back both at the university and whatnot at the University of Colorado. Go Buffs! And then at GE, I went through some leadership development programs, and GE had some incredible, like leadership opportunities and like leadership training and thinking about leadership. So I felt prepared for it when the opportunity came.
Hmm.
But that doesn't make it easy, right? It's hard and it's challenging and
Yeah, I heard on one podcast somebody was talking about leadership essentially as or specifically sales folks going into leadership. One of the big changes that they have to make in their head is like in sales, you get sort of that reward right away.
Yep.
Right? You get an approval, you close a deal, you get a commission, whatever. In leadership, the stuff you do, you might not see, 3, 6, 12, 2 years down the road.
Yeah.
So you got to be a little bit more patient with it. So
Yeah.
do you agree with that?
Yeah, I think there's absolutely a part of that that you have to have that patience and not everybody's going to do things the way that you do it. And it's all the personality types and learning, what motivates different people um, but I think you got to go into it rooting for your team and and the people on your team to really succeed and be better. And
Yeah.
I think that's really the key.
Focusing on the people, serving them, it's almost like you work for them in a way. And
Absolutely.
those are some great, leadership kind of traits. So I'm getting a feel for your kind of philosophy on leadership. But it can't all be good and fun. Like everyone has like a hard part of their job. Like what's the hardest part about managing a big team?
I mean, there's lots of hard parts of managing a team. You get pulled in a lot of different directions, and sometimes the most challenging thing is like not getting caught up in the problem of the day, right? Like backing up and being like, okay, are we as a business going in the right direction? Are we as a team going in the right direction? Like right now, like with the new compliance hold codes, it's like do it, like sometimes you just want to dive into every one of those and figure out what's going on and how to fix it. And you got to like sit back and like go through the process and work through that. So, anytime you have to deal with somebody who's not having success, that's always a challenge too.
Right. That makes sense. Random question. Like when you have to be at the top of an organization, right? You're the head of SBA Lending at TD. And so sometimes you just have to think, right, about strategy. Do you ever block out time in your calendar just for yourself?
Absolutely. Yeah, you have to do that. You have to make time. A lot of times for me, it's like on weekends or something like that, or it's like when I'm walking the dog. It's like,
right.
Being
that's when your ideas come to you.
Yeah. Well, not even like they come to me, but they solidify. You have some time, like that space to really think through the best way to handle someone or something, or whatever the case may be.
When you're such a large organization, which by the way, do you know how many like employees are in the SBA department roughly?
Yeah, I mean, if you include the BDOs, closers, and underwriters, we're about 80 people. But then it's a bank wide. You don't do 3,800 loans with just the SBA team, right? Because then it's the small business specialist, it's the RM, the RMs, it's the store. We call the bank branches, we call them stores. It's the stores and the personnel in there, so it's really a team sport.
Right. No, of course. Now, but when you're kind of at the top of all of that, how do you stay apprised as to what's going on the ground level, right? Like if there's either good stuff, bad stuff, like how do you see that? How do you get visibility into that?
I'm a big data guy, right? So it's like just we have dashboards and reports, and you're watching those. The thing I've always said is, you got to be looking all the time at your pipeline and deal call, right? So I always say like the pipeline's kind of the heartbeat of the business, and you can kind of see how the blood is flowing through that, and is the pipeline going up? Is the pipeline going down? And what's going on with that? And then are deals closing in the same ratios as they are, and looking at the processing time of it. And then deal call is really the brains, right? Like what are we choosing to do? What kind of discussions are we having with that? And then just talking to the team, talking to people, it goes back to those relationships and trying to understand, what's going on out there.
Right. The SBA landscape is changing right before our eyes, and technology is a big driver of that. To think, just a decade ago, I was getting physical loan packages mailed to the office. We've come a long way. But a lot of folks are still getting tripped up on emailing documents back and forth. Files are too big, there's security concerns, and my personal favorite, I already sent you that. Now, I don't have those issues because I use Able. Able is a deal acceleration platform focused on driving efficiency and improving the borrower experience. They plug right into your existing LOS and solves the document chaos between your team and your borrowers. Borrowers get a place where they can collaborate on loan documents at any time, and your team can easily name, organize, and push documents with the click of a button. Welcome to the future. I encourage you to go to able.ai for more information and schedule your demo today. So you just mentioned 3,800 units in 7A. That's a lot. That puts you at number 2 for units this past fiscal year.
Yeah.
That's a crazy. Is that up year over year for you guys? A lot, right?
It is up. So we're proud. We're the number 1 lender on the East Coast by units for the 7th year in a row. So, and we really try to look at all the markets that we're in and try.
So, like in your footprint, you're basically top dog.
Yeah.
So, what's been the secrets of success in the small? Because your average loan's like just under, I think, 150K or something like that.
Yeah, I think that's another thing we're really proud of. Our average loan size is 128,000. When I think about it, like one of the things that appealed to me when I joined TD was, TD's core values are, if we do the right thing for our customers, our colleagues, and our communities, we're going to win. And that's why it's a 140-year-old bank. It's the highest rated bank in North America. And I think if I compare it to GE was very numbers oriented, meaning like looking at, assets and revenue and income all the time. And not that TD doesn't do that, but TD's mentality is, if we do the right thing for our customers, communities, and colleagues, we're going to win in the end. And so getting back to your question, where that really plays in is, the whole bank is in on it, right? Like when I joined TD, I said, I want to be the number 1 SBA lender in our footprint. And some people were like, scoffed at that a little bit when I put that vision on. And a year later, we were number 1, right?
Wow,
and it's like, and I knew it's in the DNA, right? Like, this is a bank that cares about the community, and this program is so aligned with that, right? And so from the top all the way down, it's gotten more and more focus over the years, which has been good. And obviously PPP brought a lot of that focus to it, but like that's a big piece of it. And so, the program really aligns with, if we can help our customers help more of these small businesses, grow their businesses and be successful, we're going to help our communities, right?
Yeah.
And we can help more of our colleagues say yes and help that, it all comes together.
Like, you've had a lot of success in the small dollar loans, which, a lot of banks, lenders are kind of trying to figure out now that the SBA, they've made some pretty good strides, making the average or the small loan, from 350 to 500, streamlining things a little bit on specifically like 100. I haven't done $150,000 loan in like a decade.
Yep.
So I'm a little ignorant in here, but are those small loans, are you guys just scoring them?
Yeah. So, we over time we've kind of raised that, but initially we were scoring everything under 100,000. Then it moved up to everything under 150,000, and now we're up to 250,000.
Oh, wow.
So we're scoring all those loans, and that helps us to get those faster. And then we put a lot of infrastructure in the bank. We've hired a lot of small business specialists who really help find those deals, but also get them through the process, because as you know very well, SBA loans aren't easy. And then and then now we're continuing to invest in technology to continue to make the process simpler and faster and better for our customers.
Yeah. Is there anything else before we move on the small dollar loan, because to do it at that scale, thousands and thousands, like, was there anything else in the process or the program that you guys found that like helped get there in terms of process improvement or the way you underwrite them or anything like that?
Yeah, I mean, there's a lot. It's never just one thing, but one of the things we found that's gotten us back to the number of loans we're doing is it's really having that partnership between closing and the small business specialist to help get the conditions of lending satisfied and get the deal from approved to close.
Yeah, well, the closing's the hardest part, right?
Yep.
So you talked about technology. Now, I want to go back to like we're sitting at the tail end of 2023. You go back to 2-3 years, so 2020, 2021 timeframe, like because it takes a long time to implement something, like to have an idea, to really talk about it, to implement it, to then see the fruits of your labor. Like it's a long cycle sometimes. I'm just curious, like being at the top, being on the strategy side, like were there any strategic decisions you've made, 2-3 years ago that are now, you're seeing the impact today?
Yeah. I think the biggest one is getting those small business specialists back working with the customers.
What was it before? What did it look
Well,
like?
they were working with it, and then we were trying to go to a model where they were less involved and more working with the stores, and we just found, that it was working, but it was harder, and so we made a decision. We probably made the decision 3 years ago, but it kind of went into effect. You really started to see the fruits of
Mm.
that labor last year, and you're seeing it now. And then now we're taking that, we're saying, okay, how can we digitize and improve that process more to make it even better for our customers?
Right, yeah. So it's interesting. So a small business specialist are they kind of like the SBA salesperson on those small dollar loans?
Correct. Yeah.
And then you have an underwriting department,
Yep.
you have a closing team, and you have the branch. What's the branch's role in those small loans?
They're part of the team. Like think about it. It's almost like the store is the RM and the SBS is
Okay.
the BDO.
Got
if
it.
we're talking SBA language.
Okay, cool.
Yeah.
Yeah. No, that's helpful.
Yeah.
You got to translate it for
Yeah.
the audience.
Yeah.
So at one point, kind of like there was somewhat of a wall between the small business specialist and the closing team, and they weren't like talking directly as
I
much.
wouldn't say they weren't talking as much. The thought was that we were going to have the store do a lot of the conditions of lending.
Oh, and
And
keep them more in the sales, kind of
Yes.
going out with the
Yes.
front end.
And look, our small business specialists were a huge part of our success in PPP, right? So there was some of that going on, but getting that, and they still are continuing to focus on the sales side of things and developing, not just SBA loans, but conventional loans and deposits and merchant services and all the great products that TD has.
And this is actually something, you see widespread throughout the SBA industry, is just like the relationship between sales and closing is so important.
Absolutely.
And the closers have a really hard job.
Absolutely.
They get, in my world where we're doing transactions and larger deals, it's like, we go through the whole process and then we're just dumping it on the closer's desk, and say, hey, we got to close next Tuesday, like, which is obviously they're like, now they have to be like, look, I don't know where these expectations came from, but like, we've got to go down X, Y, and Z. And so that's like goes back to the BDOs and being credible, right? Setting proper expectations up front,
Yep.
managing expectations, and making the closer's job easier. So creating that healthy relationship between sales and closing is important. How do you do that though with like your setup being so big? You have people all over the place.
I think it's important to think, and I didn't probably set this up. So when I think about our business, we kind of have 3 go-to-markets, right? So we have the express channel, which is a scored product, working with the stores and the small business specialist. We have a closing team dedicated to that, an underwriting team dedicated to that, and they got to work together. Then we have a traditional BDO model. So, that team's a great team, where we have the, classic BDO underwriter closer model. And then our third is we also buy the guaranteed portion of SBA loans. Okay.
Right.
So those are our go-to-markets.
You oversee all of that.
Yes. Yeah. And then if I look at the, back to your question, the importance of closing and sales working together, the teams have done a really nice job on the express loans of the closer and the small business specialist kind of aligning and working together.
Mm-hmm.
And the same thing in our BDO channel. one of the things when we're looking at our process is we've really started to involve closing a lot earlier in our process, because looking at our team, we take our term sheets very seriously at TD. So, we pre-screen the deal. We have a full, we have a deal call every day, and credit risk is on that call, and then we get the green light to issue a term sheet. And what we found in the data is a lot of our deals that we issue term sheets on, we win. And then once we get a signed term sheet, we have like a 90% close ratio on those deals. And so instead of waiting until the full underwriting's done and bringing in closing at that process and doing exactly what you just said, where you throw on your desk and say, hey, we got to close in 2 weeks, we're trying to bring them in ahead of the underwriting, when we're bringing the deal in, so that they can all be working, and it's not perfect, but, working together to get the deal done and closed.
That's a good point. I've been hearing that a little bit more as a best practice, which, we've played around with it. The thing is, sometimes it's hard to, but there's things that closer can do without the credit memo. A lot of closers, they want the credit memo is kind of like where you start. So you kind of have to change the way the closer approaches the job. Now, I'm sure that the other thing and you tell me, but like, if you're bringing in closers earlier, you're essentially putting more onto the closers earlier, and you may need more closers. Is that take an investment to actually expand the closing team to be able to build more capacity for them to get in earlier? Or are you finding that you can just take the same team, just getting them earlier, and then ultimately it becomes more efficient and smooth because they got in earlier?
Yeah, I think it's the latter. Look, when we made that change, it was tough, I guess, up front. Because it was like, well, they already had a full closing load on their plate, and now they got,
right,
X more deals added onto that. But then over time, I think they've seen the benefit of it.
Okay.
Credit's seen the benefit of it, and the most important thing is it's worked for our customers. Right.
Yeah.
That's that. But no, we haven't had to make a staffing investment.
I think it's a great idea. I just think that people need to kind of think outside the box a little bit more and innovate, because like the processes that GE and CIT and those folks made, it almost seemed like the folks at those shops have taken that same playbook and gone out to all these other shops and just are kind of doing the same exact things they were doing.
Yep.
But that to me sounds pretty smart.
Yeah. Look, and I mean, none of this is the most dynamic thing, but yeah, we always got to be looking at our process and how we can make it better and simpler for, and it all comes back to helping our colleagues, helping our customers, and ultimately, which helps our communities. And if you're thinking about things in that way, I think you're going to
that's
win
true.
a long run.
So let me ask you this. Are you at all, we're kind of in a down, are we in a down cycle?
I mean, according to the data, no. I think GDP just came out. It was over 4, we had over 4%, which I think was like 4.9%, which is almost like China growth. That's a crazy number. I think what's going on right now, look, it's been a choppy economy and kind of a scary economy for a long time now. It was funny. I just went to and saw the TD economist, and they were like, this is going to feel a lot like the meeting we had last year where we saw the TD economist. There's headwinds. There's, inflation's obviously a huge issue. I think there's also just, the political discord in Washington and the inefficiencies going on there. And then you double that with what's going on in Ukraine and Israel. And I think it makes everybody nervous, as they should be. Those are tragic, events that are going on in both those places. And, when I look at our portfolio, we have a pretty big portfolio. It's performing really well, and, I mentioned the GDP number. Inflation seems to be, that was the big concern, last year when we were at 8% inflation. I think it's down 3% inflation. So, that's in line. I mean, I think the Fed wants it at 2%, but 3% is a pretty manageable number, historically speaking. And then unfortunately, we're a little bit in a wartime economy, which is typically good for the economy, and obviously no one's rooting for that. But so I don't know. I don't know. But I don't see anything immediately that says, "Hey, we're going into a downturn."
You didn't mention interest rates.
Well, that's inflation, right? And that's, but like, to be, they raised interest rates to battle inflation, and inflation's under control. But if the economy's continuing to grow, the Fed's not going to cut rates, right? So I remember when I first started out as a BDO, I used to show a graph, and I'd show like the like the last 30 years of the 10-year treasury, right? And prime rate. And like, what, we're high right now, but historically speaking, I don't think we're at a crazy high number. We're getting there with that 8%, but like when I bought my first house in 2003, I think my interest rate was, my mortgage rate was like 7.5%. And people said that was a great rate back then, And so I think we've gotten so used to these really low interest rates. It's, we're having to digest that and kind of recalibrate it. I think it's good that the Fed has that tool in their pocket if we do have, some real economic challenges, because, lowering rates would certainly stimulate some parts of the economy.
Did you say you used to bring a graph to your sales meetings?
To my customers.
Oh, your customers.
Yeah. Because like a lot of times I was selling fixed rate loans. I'm like, well, here's where your rate is today, and it may seem high compared to a floating rate loan, but like, how much longer do you have to be below, or like if you over the next 25 years of this deal or 10 years of this deal, if you can average on the
right,
you can win.
So you really were getting in the weeds on the selling, which I like that. That's cool. It's always a topic we discuss, selling rates and all that sort of thing. But I want to stick on this because I want to talk like specifically about the portfolio, or the SBA portfolio. Like, it's not that the rates are high, it's that they just increase so fast, so quickly. Wait, what did I just say? They increase so much so fast. And it was like in 2021, I guess, we're kind of underwriting at, prime, is 3.25, and you're stress testing 300 bips, and then you're up 525 bips.
Yep.
And, if you were at, all those deals that they may or may not cash flow. It just depends on if the business owner was able to pivot. And that I'm seeing nothing crazy, but creating a little uptick in the SBA default rates.
Sure. No, I mean, that's very hard on small businesses, to your point, to have a 5% interest rate, which is over 100%, over doubled. That's a lot. Inflation was there. Depending on what they're doing, they're probably charging more for their product than they, you don't need to go to the store or go to a restaurant or whatever to see that, prices have gone up. And some of that goes into those businesses. But I mean, interest rates are definitely a challenge for some of the small business owners. But I think you hit it on the head. Like, we haven't seen, and I don't know that the industry's seen, tremendous amounts of failures because of those interest rates. That's the beautiful part about working in the space. Like, these entrepreneurs are inspiring, right? And they figure out ways to make things happen.
Yeah, and you guys probably, you do lending to your customers mostly, I would assume. Yep. And you guys probably have pretty good interest rates, and you probably have pretty good, solid credits on the portfolio. But in the grand industry, there's different banks doing different things. There's people doing, $5 million airball deals, business acquisitions, cash flowing, people coming out of different MBA programs, getting investors to give and that's been a growing part of it. So like, the portfolio you can look at as a whole, but there's different pockets where, I don't know if we know how that stuff's going to perform, right? Like, that's sort of a new situation.
Yeah. I mean, if you're talking about the larger, the thing that we have is, we have, we did 3,800 loans last year. We have 11,000 plus customers in our portfolio. So I can kind of see over that, like, and it's performing, it's pretty in line and stable, right? I think some of those things, like if you're playing on the fringes, doing a loan to an MBA right out of college, there's some risk in that, right? And so hopefully you're structuring it the right way. We're not doing. I haven't seen one of those deals come through our shop lately or ever, but that's interesting to hear that is, and then you talk about like the large airball deals, there you got to have, hopefully you have somebody who has a lot of industry experience. You have a business that's been around for a while and you can look at the history and they have the cash flow. Gosh, if you're doing a $5 million airball deal and we're concerned about interest rates going up, that's a concerning deal.
Yeah, well, those deals tend to the cash flow tends to be good. It's more of the the areas where it's light is skin in the game.
Yep.
And the direct industry experience is not there.
Yep.
It's not there. It's general business experience, and then counting on the seller to transfer their skills, and maybe structuring it in a way where we can tie in some of the key employees or something like that. Not that they're probably not going to guarantee the loan.
Yep.
But at least you have it there. But, this is new for me. I've been more of a real estate 7A lender up until kind of the COVID, it kind of shifted. And all of a sudden, these business acquisitions are booming.
Yep.
And it's all, large 2, 3, 4, 5 people are doing $10 million deals with pari passu.
Yeah.
And that's all new. So we're going to see how that goes, right? That's all new.
Yeah. We don't do a lot of those type of deals. You mentioned at the top, like hopefully the cash flow's there, right? So hopefully the interest rate's not there. Then you're looking at like what's the DNA of the borrower and the character of that borrower, and are they going to make it work through the good times and the bad?
Right.
But yeah, those can be some risky deals.
Character's coming up more and more these days.
Oh, yeah.
And it's hard to assess when you don't, like, you're a bank, you actually know your customers in many respects. Like a lot of us are more transactional, and we're just, I'm deciding, okay, we're going to lend this person $2 million. I've had 2 Zoom calls with them, got good credit. But like, how else do you assess character besides like credit and like criminal records?
Yeah. I mean, there's all those things, other things that you look for. It's the same probably as when you hire somebody, right? And what are you looking for? You're looking for like, do they have success attributes in their past? And it's not always educational, but like, did they do some great things in the military, or did they do some great things in athletics or theater or whatever venture they were they successful, right? And like, I don't do this as much with a customer, but if you're hiring somebody, tell me about a time you failed, tell me about something you're working on to get better at, and like, are they just constantly running away from every time they have a fail, or are they dealing with that failure head on and working through it? And,
you're saying that on specific on like interviews, when you're bringing on people, you ask them that question?
Oh, absolutely. Yeah.
Really?
Yeah.
Are you involved in the interview process of like everyone that comes on board?
Not everyone, but a lot.
Really?
Yeah. I mean, if it's a salesperson, I definitely want to be involved in that. But we're lucky. We have a really great team, a lot of great leaders, throughout the team. So, so we've been really lucky in the folks that we've been able to bring on. And
do you like to get in the trenches?
Yeah, definitely. Like it's, I go back to like my favorite job I ever had was a BDO. Like, and so like there's days where I'm like, oh, I want to, maybe I'll go back to that one day.
At the end, that's what people do, right?
Yeah.
They like run a shop, they maybe start another shop, and then they go to BDO at the end, where you're kind of semi-retired. Yeah. Like, I'm going to do my 20 million and work 20 hours a week and like take Fridays off.
Yeah. Yeah.
That's the dream, man.
That is the dream. Start a podcast.
Dude, let's do it. We're launching shows. We can definitely, we can get you one. Well, I want to leave you with just this one question that I heard around the conference about. Somebody told me that employee retention is like more important than ever right now. What do you do to retain employees and keep them happy?
I think some of the biggest things with keeping people, it gets back into your leadership style, and it's like, treating them like they want to be treated, giving them opportunities to develop and grow and lead and be successful, right? If they're having a lot of success, whether it's a BDO, an underwriter, a closer, if they're having success in their role and they see a career path and and they enjoy the role and they're getting the balance, work-life balance that they're going to have, they're probably going to stay. Is when it comes to salespeople, it's like, are they able to be successful, right? Are they able to, do that? So I think that's some of the biggest things. It's a challenge. We're not seeing it quite as much right now as we did like last year. I felt like,
yeah.
But there was a lot of new players that came into SBA. So there was a lot of people coming after talent. There was a lot of people, folks moving around, but you gotta, at the end of the day, you got to have an environment that people enjoy. There's good camaraderie. It's, and people can be successful.
Now, when you say environment, and as a question we're asking a lot of folks nowadays, virtual or in person? What do you prefer?
We're like a hybrid.
You're doing like a hybrid?
Yeah. And like my strategy is, like especially with when you're managing sales, underwriters and closers, like there's metrics, right? You can tell like, oh, this BDO has an active pipeline. He's closed a lot of deals, or he or she or they, and so when you're managing them, the numbers tell the story, right?
Mm-hmm.
And then if the numbers aren't telling you the story you want to see, then you start to get into more, okay, well, what did you do? And it's funny, like managing the sales team, it used to be like you never wanted to see a salesperson in the office because you want them out meeting with customers. And so now we want salespeople in the office, so like there's a little bit of that from pull. But what we do is if we have a salesperson, a BDO or whatnot that isn't, having success, then we start to dig in. Okay, tell me about the last 5 COI calls you went on. When were those? What were you talking about? A big part of our business is working with the commercial bankers in the bank. So are you seeing them? Are you going into their meetings? That's really, are you being out of sight, out of mind? You're not going to get a lot of deals. So it's like, how are you staying present with them and talking about that? So that's a lot of the way we manage.
Yeah, and if you have to do that to a salesperson, it's not a good sign.
Yeah,
right? You probably want to try to when you're interviewing, like what's the biggest kind of red flag a potential a salesperson candidate would kind of say in an interview where you're kind of like, I don't know about that one.
It's a good question. My preference has always been to kind of build our salespeople. Meaning like have them come through, start as a lot of our best salespeople were underwriters originally, then they were a BDA and now they're a BDO. So you just know, it's not even a question on that. When you're hiring externally, that's tougher, right? Like some of the things you look at is like, are they constantly changing shops, right? Like that would be a red flag.
Okay.
And that one of the biggest things you see sometimes is you'll interview people and then you'll start to get into a deal. Like you'll start to have the deal discussion and they don't have it. Right. Like they don't, like,
I've seen that,
and it's like, if you can't talk to me about this, how are you going to go sell, back to that credibility piece we talked about, how are you going to go sell a small business owner that's about to do the biggest transaction and deal of his life if you can't?
If you don't even know credit, you can't talk shop about deal. So I feel like credit people, not to like put everyone in a box, but like credit people are risk averse and salespeople are willing to take risk and go out and make it. Like, do you find that some underwriters are like, when they're trying to make that transition over to sales, they're too conservative? If they're too concerned about like not succeeding, doesn't that make it harder to succeed? Like if I'm a salesperson and I go, I'm not even thinking about failing because it's not an option. You have to make it work. But a lot of the underwriters, they're and maybe it's different for you guys because maybe you have like younger talent and stuff like that. Yeah. But in general, the ones I know, they're like, I don't know. Like it'd be nice, but like, what if I fail?
We've had a lot of them that have been successful in doing that. They have tended to be earlier in their careers when they've kind of made that jump but it really helps to know credit, right?
Absolutely.
Like, because they one of the worst things any BDO can do is like waste their time on a deal that will never happen. Like you just see them like spinning out and you're like, why are you working on that? Like,
you see that a lot because a lot of people kind of like, they think, maybe there's just, if I could just, there might be a way to do it. And then, you spend a lot of time.
So the good thing about hiring somebody from our shop who knows our credit is they know what we do, right? So they're looking for the right types of deals, and we have a lot of success with that, that model. But a lot of it comes down to that, is that what they want to, if they don't want, and we have a lot of credit folks who have been in credit for a long time and are doing great, and we're super happy in that too. It's like, what do you want to do? And that's the benefit of working at a really big bank. It's like, what do you want to do? Okay, you want to do there, there's lots of different places you can go within a bank like ours.
And that's good for retention.
Yeah.
Because then if you have a path to kind of keep going, that is a big key, where a lot of shops that it's just the shop and it's like you can be an underwriter or a credit manager, or be like, there's not that many places to go. So do you ever get asked by a candidate, do I have to cold call?
That would be a concern if they ask that.
Right?
Yeah.
It's like, do I get to cold call? Right?
Yeah. I mean, you get asked by candidates, like, how do we develop business? But you got to make some calls. Look, but hey, the best salespeople are making warm calls.
True.
Right. Like, so I got very quickly when I was a BDO to a point where I wasn't making many cold calls because, I was calling up people who I knew, and then they were telling me about somebody, and I had a warmer lead, and you have I'm sure with, everything that you're doing, you're getting a lot of warm call, you're not calling somebody out of the blue. It's because somebody told you to call them. Right.
Yeah. I mean, nowadays for sure.
Well, that's what you want to do as a BDO, is you want to get to that point where you have a referral source, you have a network, you have customers that are referring you, you have COIs that are referring you, you have, partners that, in our side, other people in the bank referring you business.
Yeah. And you're not going to get there without building that credibility early, like you said.
Yeah.
Perfect. Well, Tom, thank you so much for joining the podcast. This was a blast.
Oh, no, thank you. I really appreciate it. And good luck with everything you do.
All right, that's it for this week. Don't forget to subscribe to the podcast so you never miss an episode of The Art of SBA Lending. And if you have any feedback or suggestions, email me at ray@artofsba.com. Until next time, ta-ta.